Hi, welcome to the Market Alert for Thursday, the 3rd of August 2017. So yesterday in the pound, everything quiet at the moment. We got a bit of a move from the open. We had one potential sell signal which wasn't filled. Then the market moved higher, trading up to the 132.50 level there. In the bigger picture, you can see that the pound continues to move higher. This means that the US dollar, of course, is moving low, which we'll look at in just a moment. You can see across here, looking at the bigger picture, where the market's heading to 132.46 is where we saw some selling way back in October of 16 there. So the market at a major area of resistance there, and if we have a look at this high as well whilst we're here, because that's where the next level will be at 134 should the market continue to move higher. Let me just grab the move tool there. So that's where we are on the pound in the bigger pictures, just so that you can see where we're likely to meet some sort of resistance should prices continue to move higher. Let's just save that as well. In the Dow, well, different story here. The market very quiet yesterday, and no surprise really, because we're waiting for the non-farm payroll figures, as I said, on Sunday, Monday, Tuesday, Wednesday, and again today. This is going to be crucial for this week. And also, of course, we're in the summer holes as well. Market can be quiet, and you can see this. The market doesn't want to go up, and it doesn't want to go down at the moment. In the main part of the session, it seems to do everything it wants to do, apart from yesterday in the pre-market session. So as we get closer to a major news item like non-farm, all of the interest rate rises are being based upon the unemployment rate, the labour participation rate, and of course that's become the main focus now of the interest rate policy. So the market hanging around the 22,000, and as I said yesterday, watch this market as a resistance area. Sent the email out this time. Market came back, and then they brought it back, managed just to get it above. Saw a bit of buying there, desperate to get it above, and then the market came back once more. So expect more or less the same again today. As you can see, overnight it's been really quiet as well on the Dow there. News for today, what have we got? Carney is going to be speaking. I don't know why that's blanked out there, but we've got the interest rate for today. Also, this is going to be an interesting one actually for the pound. We've got the MPC official bank rate vote from last month as well. It's forecast that 6 want to keep rates unchanged, 2 want to increase. Last time it was 3 to 5. So it'll be interesting to see how that figure comes out at midday. Then you've got the interest rates. They're not going to alter them. Not a cat in hulls of interest rates going up in the UK at the moment, if ever, as we head towards a major correction, no doubt, in the autumn. Unemployment claims from the US, and then factory orders also out in the US as well at 3 p.m. So manufacturing figures out showing slightly weaker, but the factory orders are forecast to be up. In the daily charts, we can see that the Dow is still making new all-time highs. Yesterday we had the 22.47, just got close to the 22.050, the psychological level, but failed to hold. We've been below, as we've just seen, and then now back above as well. So this 22,000 level is very important for the market, as we've seen. They're going to do the best to try and hold the market above this level. But again, that's dependent upon the non-farm payroll figures tomorrow. And even if they're bad, I expect the market to move lower, and then bring the market back, of course, before the close, which has been the normal pattern again, because they don't want this falling apart whilst they're all away on holes. It's going to be September, October when we see any sort of major correction, unless, of course, something comes out of the blue of a geopolitical nature, of course. And then finally, on the implied volatility, So we got the implied volatility up slightly yesterday as the market showed some indecision. We moved from 6.99 to 7.31 there. Let's just get rid of the 757 now. So we got 731 for yesterday for the implied volatility. Again, still range bound and obviously reflecting how quiet the market is, apart from the bit of a initial sell-off we had. Whether the traders are getting worried again, I don't know, but we've got 731 there, up 0.32 on yesterday. And that's really about it. Again, the market just waiting for these non-farm payroll figures out tomorrow at 1:30. So let's see what happens. I expect the market to be fairly quiet again once trading starts at 2:30. Right, that'll do it for today. As ever, thanks for watching. See you in the next one.